Hello and welcome everyone to the week ahead commodity report for the 17th to the 21st of September 2018, presented by myself, Phil Carr, at the Gold and Silver Club. So today we will be taking a closer look at gold, silver and crude oil prices as we go into next week. So what do you need to know as we go into next week? Well, on Friday, US President Donald Trump has directed aides to proceed with tariffs of another $200 billion on Chinese goods, and we've seen that certainly have an impact on oil prices into the close and also gold and silver too, which we'll take a look at. The US dollar has found support on Friday after upbeat US economic data and also been treated as a safe haven again here after additional trade tariffs which are being proposed on China. So as a result, the dollar strength into the close on Friday has put some pressure on commodities. Also, hedge funds and money managers, they have cut their net long positions on crude oil futures and options over the last week, but they have reduced their net sell short position on gold and silver. So with that, we'll move over to the charts and we'll talk you through the levels that we're looking at as we go into next week. Firstly, let's have a look at crude oil here. In fact, we covered crude oil on Wednesday's energy report, and we've seen the price action that we were anticipating here if we were to see a break back below Wednesday's low, which we saw on Thursday, and we've seen a reversal here for Brent crude oil coming back down towards 78 to 77 US dollars per barrel. This in fact lent to a really nice sell short position. You could have taken that either via Brent crude oil or on WTI crude oil. We went through that analysis in a bit more detail on Wednesday's report, and that has provided us as well at the Gold and Silver Club with a nice sell short position. We've actually banked our profits on oil for just under 100 points on Thursday, but we're looking for the potential to re-enter now as we go into next week. So if we have a look at Brent crude oil here, we've still got the sell signal. We're right at the upper end of the Keltner channels at the moment. We've got a lower high, a lower close, and also a lower low, finding a bit of support right now at the weekly pivot. But if we do see the dollar really start to build momentum next week, and we have seen a reduction in the overall net long position on oil, it is at the moment quite vulnerable to another sell-off here. So if we were to see, for example, oil next week hold around 78 US dollars per barrel on Brent crude oil, roll over and then break back below the weekly pivot, which sits at approximately $77.50. If we see that sort of price action, we have quite a lot of clean air here for a move back towards the monthly pivot here as well, which resides at approximately just above 76 US dollars per barrel. So potentially going into next week, if we do see weakness here on oil, Brent crude oil could lend to a sell short opportunity, but it would need to break through some of this support because we do still have a bit of an upward trending channel in play here. So it would need to confirm that if we were to see a sell short opportunity. But I would definitely keep that on the radar with Brent crude oil if we see additional weakness on oil going into next week. With WTI crude oil, we've had a couple of positions on this over the last week. So initially at the beginning of the week, we went for a long position on WTI crude oil, which we then banked towards the upper end of this resistance zone, and we've seen a nice breakout here back above the monthly pivot at the beginning of last week. Nice continuation pattern. We then reversed position and then sold into oil here, banking our profits on Thursday, and WTI crude oil into the close on Friday has formed a doji candle, which is essentially an indecision candle here. It's still quite range bound at the moment, so my preference actually right now going into the early part of next week is to look at Brent crude oil. If there's additional weakness in oil, we may well execute a sell on Brent. If we were to see more upside on oil going into next week, it would probably be WTI crude oil, which the overall price structure is stronger here, that we would look for a potential long. But right now we're range bound on WTI crude oil. We're in the middle of the range. Support is coming in at 67 US dollars per barrel and resistance is around 71 US dollars per barrel. So the ideal situation right now is of course buying at the lower end of the range, so revisits back towards the 67 US dollars per barrel level tend to be well supported at the moment. So that would be an ideal accumulation zone or buy zone, and resistance at the moment is residing around 71 US dollars per barrel, which at the moment is the ideal zone to take profit if you're long, and also look for sell short setups around that level of resistance as well. So quite a range bound market at the moment on WTI crude oil. Now moving over to the dollar, you definitely want to have the US dollar on the radar as we go into next week. We've actually got a buy signal on the dollar as we go into a fresh week here as well. Into the close, you've got a bullish engulfing candle, and we found support at approximately the 94.50 zone here, and into the close just closing under 95 here. So we could see certainly the potential for more upside on the US dollar going into next week. We could get a break back above Friday's highs, Thursday's highs, and drive back to around the 95.35 zone, which would be around the monthly pivot as well, which would likely put some pressure on the metals in the short term. So with gold here, we took advantage of this breakout last week, midweek, and we caught this breakout, but we closed that position ahead of the European Central Bank announcement on Thursday and Mario Draghi's press conference. And it's often the case that we can see a breakout prior to that and then a sell-off later on in the session after remarks from the European Central Bank. One of the best examples of that is actually going back to mid-June here. This was a European Central Bank announcement where we saw gold get a bid and break out prior to that, and then on the Friday we had this big sell-off. Now, it's not only due to the European Central Bank announcement, we've also seen an escalation, of course, in tariffs which have been put to China, and that has also contributed to the sell-off here on gold. But very much like oil, gold is also a bit range bound at the moment. So essentially, when you're looking at positions on gold at the moment, the sell zone and the take profit zone is approximately at $1,212, and the buy zone of late has been around $1,190. Now we're coming in for a retest of that level of support here, and we're quite range bound still on gold here. So I would be looking to see how the price action does fare as we go in for a potential retest of $1,187 going into next week. That's the weekly pivot and the previous low here as well. And then below that, if we do see additional follow through to the downside with gold here, we've actually got a sell signal now going into next week as well. So the next levels I would look at, there'll probably be some support residing around $1,187 to $1,190. If gold was to break below that zone, the next level is around $1,185 to $1,180, and then the lower Keltner channels here, they reside at $1,170. We do bear in mind that going into next week, the overall net sell short position on gold and silver has been reduced from hedge funds and money managers. So it'd be interesting to see if we do get more follow through next week, or whether traders just buy the dip. So if we see traders just come back in to buy gold back at around the 1187 zone. We're flat on gold at the moment, so we don't have a position, but we're looking to see where the next level of support will come in. I wouldn't rule out also selling into gold as well if we were to see a break through support zones, but right now we're really ricocheting between support and resistance at the moment on gold. But I want to see how the dollar does go into next week. If the dollar really starts to break out and follow through to the upside, we've got a buy signal on the dollar that would likely lend more pressure to the downside for gold and silver. Then moving over to silver, silver is right back at $14 per ounce as we go into next week. Now, the gold to silver ratio last week hit 85 to 1. So essentially that was the 10-year high for the gold to silver ratio. So as of last week, you could have exchanged 1 ounce of gold for 85 ounces of silver, and that's very extreme. We haven't seen the gold to silver ratio at that sort of level for over 10 years. So where we're poised at the moment with silver going into next week, silver is approximately down 17% so far in 2018 from where the price started at the beginning of the year. We're sitting around the monthly pivot. We are also at the lower Keltner channels here as well. It's whether silver will hold at $14 and springboard and find support at that level, or whether it just needs to flush out again. So whether silver needs to just flush out, take the price back towards the weekly pivot at approximately $13.90 and potentially come back for a revisit of about $13.50. We haven't actually been that low on silver since approximately January of 2016. So it'll be interesting to see if we do see more follow through to the downside here, but it is a little bit vulnerable going into next week. If we do see a breach back below $14, whether we just see a lot of stop losses get flushed out and whether we would see a reversal back down to around the $13.50 zone. And that's what we'll be watching out on silver going into next week as well. But it is possible, because silver has held a lot of times at $14 per ounce, that it will hold at that level and then springboard higher from that zone. So watching that level very carefully for silver and looking to see where the next trade opportunities will be on that market as we go into next week. Also, platinum broke out back above $800 last week. Into the close on Friday, we do actually have a fresh sell signal which is developed here on platinum. It's just whether we see additional follow through. So the strength of the US dollar and also Trump just readying for trade tariffs on China, that has also put pressure on platinum going into next week as well. So what we'll be watching out for is whether we will see additional follow through to the downside. So typically, each time we see an escalation in trade war tariffs, the markets which get impacted significantly are copper. So copper, you can immediately start looking for sell short opportunities. Oil will often sell off on any trade war escalations as well. The commodity currencies too, such as the Australian dollar, US dollar, the New Zealand dollar, US dollar, they will all tend to sell off, and you can look for buy opportunities on the US dollar as well. That tends to be the sentiment each time we see an escalation in trade war tensions, and you can look to catch that momentum shortly after you see these news updates, and then you look for additional follow through. And then of course, once the sentiment starts to change again and there's a new narrative in the market, then you can start to look to take profits. But at the moment, that is the headline news item, that Donald Trump is readying tariffs of 200 billion more on Chinese goods, and as a result, that has immediately impacted the dollar, with dollar strength, pressure to the downside on gold, silver, Brent crude oil, copper, and also platinum. And of course, if you would like to join us at the Gold and Silver Club and become a member of the private members live trading room, there is an opportunity for you to do so. By being a member of the Gold and Silver Club, you have access to live trade alerts, so you get access to those via WhatsApp, email, and SMS. You have mentorship, expert advice, in-depth market analysis, and trusted insights, so you can know earlier how to act quicker and maximize on each trade opportunity. Very simply, if you'd like to find out more about the live trading room service, all you need to do is go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. Also, make sure you subscribe to our YouTube channel. That way you will be kept updated with the latest commodity reports.